This is educational, not trading or investment advice, okay? This is entertainment, mainly educational. Future stocks, bond trading of any kind involves substantial risk. You may lose everything you have. Before trading or investments, do your own due diligence. This is not a recommendation to go out and trade with your money, okay? If you do so, you're on your own. If you're watching or listening to this video, you are agreeing to these terms. Okay, let's get to it. Welcome and thanks for stopping by. I'm Digital Micro. You're on the Digital Micro Trading Journal channel. Day trading for an ROI payout. It's just my trade journal market analysis. Thursday, first day of February 2024, and we do have a news catalyst, 8:30 a.m. Eastern Standard. Daily affirmation, I see it and understand. Rich discipline and rules, flexible and outcome expectations, independent thinker, impeccable risk manager, precision-based trader, responsible business manager. Left, we have the NASDAQ. Note this blue line is the 9 EMA, and we are down and we closed below it. Here we are, first day of February with a baby green inside of the body of the previous day, the candle body here in black. In the middle, same kind of situation. We're below the 9 EMA from the previous day on the close, and we've got a green candle. We'll see if we can get back up to this blue line on the same day, because it is the first of the month, and on the first of the month, usually you have institutional buying. Things like 401ks buy always on the first of the month. And the dollar on the right. So two green candles in a row. Look at this prior day candle though, with this long candle wick below. So this is a discount wick tail, and then above it, and then we closed. You see the body of the candle in green, and here we are, first of the month. So not everything can be green, and so we're going to watch this real closely. And let's remember, at the close of Thursday, we have big earnings on some major mega companies on the earnings front, and then of course non-farm payroll for Friday. So we're going to focus on the ES next chart, smaller time frame. Let's look at the levels. E-mini S&P 500. I'm doing the 1 hour because I want to have context of a greater range of days. So right about here was the FOMC, and you can see we really got down below the new week open gap. I pointed that out on the previous videos this week, that this was a key area. So the high and the low, again, 4912.75, upper new week open gap, and lower 490875. So we go down, we have this SIBI, sell side imbalance, buy side inefficiency, this long candle all the way down. We go through the weekly volume imbalance. So this was key. This is a PD array below, and we dig into the top area of a weekly fair value gap, but we don't get to consequent encroachment of it, okay? So just this alone, getting away from what's above here, this fair value gap, 4 hour, higher time frame, and again, we hit all-time highs earlier in the week multiple times, but we failed to displace above it. And then the setup was, again, be waiting, be patient yesterday for FOMC. And of course, basically the Fed chairman put a damper on everything because it just got way too exuberant based on the December meeting, and he was a lot more rational on when and how rates might go, as far as, are we going to have interest rates go down anytime soon, like as soon as March? So the language was a lot different, a lot more direct, and although it is February 1st, that's the problem, why I don't want to have a lot on right here. Plus the big earnings reports at the close Thursday, and then non-farm payroll. I really do want to have a lot of dry powder. So 50% of the FOMC announcement to the low puts us at 48.90, 50, and then the basic zone for possibly adding, if I was looking for a retrace and it wasn't the first of the month, it'd be about 4,900 and above. but I'm just going to be real cautious. Again, that new week open gap is still a zone and in play, because if price can hold above it, that's really telling us something. But I don't know. I'm not really thinking that way at all. Since we did touch this weekly fair value gap, I think this, for the rest of February, is going to be a zone where we definitely can go below it and reprice the whole thing. And the bottom of that is 48.38.50. Again, that's not a weekly target necessarily for this week, but I'm just saying this needs to be repriced down. And then below that, we've got the first of the year new week open gap at 48.18, 48.12 for sure. We're not done with visiting that area. I just don't have a time frame on it. So this is the big picture of the levels. All-time high right up here, and beginning of the year we were really jacked up, and you can see the impact. We've had probably the biggest displacement candle down on that in the last several days, and it was all due to the FOMC. So that's it for this video. The idea here is the strategy, again, just reminding myself and everybody that's watching, is again very special earnings announcement post-close Thursday, and we're setting up for this non-farm payroll Friday. Traditionally do fairly well on that, and I want to have a lot of dry powder, but I am cognizant of these areas. So this 1 hour fair value gap is a zone, new week open gaps, and then the zones we went over below. Those are the price action levels that I'm going to study for the next 2 days of this week. Thanks so much for watching, especially OG subscribers, and welcome all 2024 new subscribers. You're part of the reason why I do this channel. Thank you, and don't forget to and subscribe if you haven't already. Aloha and take care. Bye.